Managing Director, and Mr. Shyam Sathasivam, Managing Director for both healthcare and consumer goods sectors, and also Mr. Aruna Deeptikumar, our Group CFO. First of all, we'll take you through the group results and also the segmental results, and then we will open the floor for question and answers. So first of all, I would like to hand over the forum to Mr. Aruna Deeptikumar to brief you on the group results.
Good evening, ladies and gentlemen. My name is Aruna Deeptikumar, Group CFO, Sunshine Holdings PLC. Let me take you through the group financial highlights of the first half of the financial year. Overall, in Q2, we have performed better than Q1 with an excellent growth in EBIT, which is 15.3% year-on-year growth, mainly due to margin improvements in FMCG and cost optimization that we have adopted. For the first half, we have recorded 10.9 billion in terms of top line, which is 5.7% year-on-year growth. PAT was dropped by 30% due to lower performance in the agri subsector tea, and also increase in the tax rate in the FMCG sector with the implementation of the new Inland Revenue Act. PATMI shows an excellent growth, mainly due to increase in the shareholding by Sunshine Holdings in the agri and FMCG sector, which is 33% earlier, went up to 60% in Q3 last year. Moving on to the next slide. 5-year CAGR quarterly is 6%. You can refer the numbers given in the slide. Moving on. As I mentioned earlier, we have recorded a PAT of 461 million, which is a drop year-on-year, mainly due to lower performance in the agri sector, mainly tea subsector, and also we have challenges in margin pressure, margin challenges because of the depreciation of local currency LKR against US dollar, and also we have an improvement in the margin in FMCG sector because of the tea prices, dropping tea prices. So let me hand over the session to Mr. Shyam Sathasivam, Managing Director, Healthcare and FMCG.
Thanks, Aruna. Thank you all for being here, joining us on this call. Let me take you through the healthcare sector. Firstly, you will notice in the healthcare sector, we've been impacted by both depreciation as well as, devaluation as well as the price controls. Overall, for going on the second quarter, we've had a 7.7% revenue increase, which is dropping from our performance in the first quarter, but for the half year, 11.5%. My primary concern would be the fact that while volumes are growing in the healthcare sector and we've been able to achieve revenue growth, EBIT's been significantly challenged. Like I mentioned, two issues, the currency devaluation and the price control. In terms of the currency devaluation, the impact has been started to be felt primarily from September, which has had a direct GP impact for us and continues into the future as the currency moves. As you will know, all of our healthcare products are imported, therefore will directly face the impact of any currency devaluation, and we will work through on that. It is connected to the second issue of price controls. As you know, overall, the pharma market has controlled price across all products with a significant range of products under specific price control by virtue of price cap. So that's what's happened in the second round. As in the 1st of September, we had the second round of products Initially, a year and a half ago, we had 48 molecules. We've had another 15 products come on board, and we are impacted by many of those products. For example, insulin, which was price control in the second round. We are the market leader with 70% market share. Therefore, the impact is significant immediately and into the future. So these are two significant issues we've had in terms of EBIT and profitability sort of contraction in the second half and second quarter. Now, we have grown the businesses in top line also because we have had bolt-on acquisitions of agencies, pharmaceutical agencies, as well as medical devices. And we continue to look for such opportunities to grow the top line. And we will keep you, informed as we sort of change the mix in our business. Of course, our healthcare business has three sectors: pharmaceutical, medical devices, and retail. Let me take you through the retail business, which has had a very good second quarter, very good first half of the year. We have continued to invest in our existing stores in terms of improving the value proposition for our customers. We've seen greater footfall driven by our wellness focus, as well as greater availability of all products. We have seen margins being enhanced because of the consumer shift from the lower margin pharma to the higher margin wellness. We've had a 27 basis point improvement compared to the same period last year. Footfall continues to be strong. We are in many neighborhoods, we are the preferred pharmacy and healthcare retail experience. We continue to build on that, and to improve the retail experience, we are importing directly products which we believe the consumer would like to have. For example, we are the master franchisee for GNC from the US. We've had very good traction on that set of products, and we continue to look for such wellness and beauty products which can enhance margin and customer experience in our retail business. Let me now take you through our consumer business. Our consumer business is primarily in tea, where we have three major brands: Zesta, Watavala, and Run Kahata. Overall, these brands command over 35% market share and are the market leaders in the domestic branded tea market. This business has had second quarter revenue growth of 10% and first half of 15.8%. The top line continues to grow, primarily driven by price growth as well as some volume growth as well. We continue to be priced competitively, but also have been able to move the price to the consumers over the many years in terms of building brand loyalty. We've had even better news when it comes to our margins. Our margins have more than doubled in the quarter and running at significantly higher percentages, double digit from 6% to 15% the second quarter, into double digits also for the first half, primarily because of the price increases we have taken, while the tea market in terms of input costs has continued to be lower than anticipated. But our brand has been able to command the premium and build volumes. So we are positive on the FMCG sector, growth opportunity and margin opportunity. Let me now hand over to our Group Managing Director, Mr. Vish Govindasamy, who will take you through both our agri sector as well as our energy sector. Thank you.
Hi all, welcome to the Sunshine Holdings webinar on the second quarter results. So I will be talking to you on the agri sector results. The results are shown separately for Hatton and Wata, but I will talk to you both sectors put together as a sector. So overall, the agri sector has contracted by about 8% for the quarter and about 8% for the first half. And this is mainly due to the reduction in the tea crop, which is about 600,000 kilos. We have also had less than last year's net sale average on our tea, about 50 rupees or 5.5% year on year. So that is mainly the reason for the reduction in the PAT for the sector from 743 for the half to 453. As for the palm oil, which is primarily the Vatavara plantation company, has had an increase in the net sale average from the second quarter, mainly coming from a duty increase that was put in place during the second quarter. As for, I'm sure everyone's looking at what is happening with the wage settlement for the plantations. As you all probably know, on 15th of October, the current wage agreement lapsed, and we have now communicated with the unions that we can offer them a package of a 940 rupee which will comprise of 600 rupee basic wage and a package of 340, which will make up the 940 rupees. The discussions are continuing. I'm sure we will come to an amicable settlement pretty sooner than later. Of course, their demand has been close to 1,000 rupees, so we are not too far apart to conclude this, and I'm sure it will get concluded soon. Moving on to the energy sector, we have probably had some of the best results for a quarter and a half this financial year. Second quarter, we had a quarter-on-quarter increase of about 67%, and half year we have had close to a 90% growth in our top line. And similarly, the PAT has grown significantly higher for the quarter and the half year with a PAT of about 102 million. This is mainly coming from the two plants that are running, which is 1.4 megawatts and a 2.6 megawatts that are currently running. We are in the process of building the third plant, which is a 2.4 megawatt plant, which is the Elgin hydropower plant, which is to be commissioned by the end of November 2018. We have had some construction delays due to the continuous rainfall, obviously, which has helped the other two plants to give the type of numbers that we have been able to get. We are now also moving on to the rooftop solar power, and the first project, which will be commissioned hopefully by the end of November with about 400 kilowatts of power. So that is being done at our Kalania premises. It is almost 90% complete and scheduled to be commissioned by the end of November. That's for the energy. Let me now hand over to Hiran, who will conclude the session with the question and answer session, I believe.
Thank you, Ish. Now I would like to open up the forum for Q&A. So I would appreciate if everybody can announce their name and ask the question so we can answer the question. Hi, you can also type in your questions on the chat box, and or also you can ask questions directly. Hi, I'm not too sure if you can hear this, but like if you have any questions, please feel free to ask us. I've unmuted the conversation, so you can go ahead and ask any question. Thanks.
Hi, can you hear me?
Yes, please go ahead.
Hi, this is Madhusha from CGCLSA.
Yes,
I have a small doubt, like, yeah, so in terms of tax, so there's this huge difference between this tax figure for like ETR for Q18. Can you hear me? Hello?
Yes, we can hear you. Please go ahead.
Between those two quarters, I think it's mainly coming from the agri sector.
Yes, Madhusha. This is actually agri sector mainly due to timing issues because we have had a deferred tax reversal in last year, September, whereas we have made a provision for taxation this year. So when it comes to reversal and provisions, there is a difference. It's timing issue.
Hi, the line is not clear. Can you please say that again?
Yes, of course. With regard to the agri sector taxes variance, that is mainly due to timing issues with regard to the deferred tax provision. Last year we have had a deferred reversal in the along with the demerger of Hatton and Watermelon plantation. So, and this year we have made the normal tax provision. So that's the mainly due to timing.
Okay, so it's
And
mainly due to low base.
And also in the group level, we have affected one company, FMCG, of the tax rate, increase in the tax rate more than 100%, from 12% to 28%.
Okay. And then in terms of this 2Q18 figures, so you all have adjusted the PATME for one-off gain. So can you just elaborate on that?
That is one of gain fair value adjustment that we have adopted last year, which included about 127 million fair value adjustment, which was taken out in the comparative to align with the comparative figures.
Okay, thank you.
Thank you, Madhusha.
Okay.
If there are any other questions, we'll be happy to answer.
This is Ashwant from Cal.
Go ahead, Ashwin.
A question on the agro sector. Which mentioned that the wages are about to go up, and if it reaches 1,000, what kind of effect do you see in your bottom line, in the administrative expenses, and ultimately in the bottom line?
Ashwin, thanks for the question. What we predict based on the package that we have proposed on the tea sector, approximately, we for the next 6 months, the bottom line anywhere between 175 million to 225 million, depend on how the remaining of the wage, that is 600 basic, and the remaining part of the package, how it gets dissected will differ anywhere between 175 million to 225 million on the PAT. For the tea, palm oil will be about 35 million.
So the net impact would be anywhere between 200 to 235 million.
Yeah, that's all right.
One other question on again the agro sector. Now, how have you seen the currency depreciation affecting the demand in the tea auctions, and the prices going down ultimately will have an effect on the FMCG side as well, where you can see increased margins. If have you seen any net off there, or has the demand been responsive to this depreciation?
So far, we have not seen any loss of demand because of the depreciation. Matter of fact, the low-grown teas have rallied the last 2 auctions. The high-grown teas have stayed pretty much. I think if at all, some easing of the price will come because there will be poorer quality teas coming after the festival now. So otherwise, I don't see any huge price deflections coming in the next 2 months or so. Maybe the last quarter depends on what the quality season does. At that point, maybe some effect, but right now, no.
Okay, thank you.
Okay, thanks for the question.
Hi, can you hear me?
Yes, please go ahead.
This is Sean from Asia Securities. Could you shed some light on the dairy business? How it's progressing, whether you're heading towards break even?
Yes, I think Sean Vish will take that.
Sorry, I didn't get you.
Hi, Sean. This is Vish. Just let me give you a quick background. So we started the farm with 600 herd, and now we have moved on to we have about 1,500 animals in the farm. About 950 to 990 are milking right now. So our plan was to get to 1,000 milking cows, so we are quite close to that. Our production was to get to about 25,000 liters. We have come close to about 20,000 liters now. So we are also inching closer to that mark. So everything is going according to plan. Our revenues are probably the best in the industry in terms of price per liter of milk. What is challenging for us right now is to get the feed cost under a particular amount that we had planned on. And obviously the currency devaluation is probably not helping us because some component of the feed is imported. So we are working on other alternates that we can get locally. So overall, it's going according to plan, Sean. Hope I've answered you.
Thank you.
Sean, did that answer your question?
Hello. Yes. Thank you so much.
Okay, thanks. Any other questions?
Hi, this is Rasika from Guardian Farm Management.
Hi, Rasika. Please go ahead.
I have a quick question on pharma sector. Just would like to know about basically the health guard business. Just to know like how what is the... Yes,
नाही
sure.
मी तसं टाकलं ना टोटल 6 कॉल या स्लॉट मध्ये 4 कारण की इकडे 2 कॉल होते मुद्दाम ते बोल केले मी माहिती.
Hello.
Yeah. Hi, Rasika. This is Shyam Satasam for the health
Hi.
sector.
Yes.
So your question was on our retail business, which is Health Card. So
Yes.
primarily, the Health Card's been doing quite well as per the figures. Footfall has been quite good, but our basket value increase has been even better over the last 2-3 quarters. And we see this coming primarily from the shift from our customers buying more wellness products, which are quite premium compared to pharma products, which are both lower margin and now with price control at a lower price point. So our model of being your neighborhood sort of wellness store is continuing to be well accepted by the consumers in that neighborhood. So we're seeing good traction on that business.
All right. Just one follow-up question. Any chance you can give me an idea of your revenue contribution of health guard to the overall pharma sector, and if possible, even the profit contribution?
I can give you the revenue. It's at about 21% or so revenue contribution.
Okay.
Right.
Right. And how has the growth revenue been?
Sorry.
How can you put a figure to the revenue growth?
Revenue growth has been close to double digits. We were at about 16% or so.
Okay, great. Thank you very much.
Guys, thank you for participating in our investor webinar. If you have further questions, you can email me or Kirana, and we'll be happy to answer anything. Again, thank you all and have a good night.